This matters now to our guest host, Stephen King, is chief global economist at HSBC. The focus is on, well, forget about chronic recession in Europe, a stagnant China. Don't forget Japan. Abenomics is the most interesting experiment. Spend, reflate, depreciate. That's a poem there. Stir often. Japan has and is a failed experiment. Why is Abenomics failing?
Well, it promised a great deal. The whole idea was that you had this massive monetary stimulus, you had some fiscal stimulus maybe as well, and lots of structural reform. But after the big fall in the exchange rate that took place in 2012, 2013, maybe some improvement on the export front, but actually the overall trade position didn't improve that much. Then you had the consumption tax coming through, the big increase a while ago, which was a hefty squeeze in terms of people's household incomes. And ultimately we found from a lot of countries that QE stops the worst from happening, but it doesn't necessarily create conditions for the best to happen.
And what is so emotional here is I think of the England of the 1930s, or you can even look at the way that you create inflation. If the society has a low interest rate and you have new big inflation, all of a sudden you have shockingly low real rates. That's where Japan is.
Yes, that's right. And of course, what's really happened over the last year or two is that the fall in the exchange rate has simply pushed up import prices, which is what you'd expect with a weaker exchange rate. But at the same time, the response in terms of wages has been much smaller than was originally hoped for. So, the original idea was import prices go up, price expectations go up, wages then rise. But wages didn't rise. And one of the big things, not just in Japan, but across the whole of the developed world, is that wages are remarkably sticky. You can push up headline inflation a bit, but if wages are sticky, you simply squeeze spending power and you end up with a weaker economy.
How does this play out? How do you see the balance of the culture of Japan with classic Hicksian ISLM, economic mumbo-jumbo? How does it play out?
Well, part of the problem here is that so much of Japan's weakness is really structural rather than cyclical. It's all very well saying you can do a little bit on monetary policy or fiscal policy, but there are long-term structural issues, most obviously demographics and ageing population. And the ageing population creates its own social problems because as the population ages, the dislike of inflation becomes ever more intense, and therefore the ability to create inflationary expectations actually goes down rather than up. That's been a big thing we've seen over the course of the last couple of decades. Also, of course, Japan's right at the heart of the whole outsourcing, offshoring story. A lot of Japanese companies saying, yes, by all means we'll invest,
but not necessarily
in Japan. We'll invest in China or Indonesia or Malaysia.
Exactly. What can the United States learn about this new push by Japan to move capital abroad? We're right behind them, aren't we?
Yes, so effectively you want, from a shareholder perspective, to make sure that your companies are earning the best returns for your shareholders. One way they can do that, of course, is to export their capital to areas where labour is that much cheaper. That helps profitability, but it also puts downward pressure on wages at home. And so you end up with a peculiarity we've seen over the last few years, which is, in the US case, very high profit shares, low labour shares.
My simple framework is US, Germany, Japan. Does that become U.S., Germany, China? Do we push Japan aside and do they just drift off over 5 or 10 years?
Well, the difficulty here, frankly, is if you're growing at only about 1% or less in a per capita sense, compared with other countries, you will gradually go down the pecking order. So we go back to the late 1980s. Japan was the second biggest economy in the world, threatening to overtake the U.S. It's now the third biggest and will probably fall away over the next 20 years.
Stephen King with HSBC.